Well, welcome to another episode of Insurance Gone Wild. I'm your host, Dennis Settlemeyer, and my lovely co-host once again today. I can't even speak. It's going to be a long...
It's going to be a long podcast.
It's going to be a long podcast.
I like it.
All right.
Stephanie Lencioni.
There you go. She's got it. She knows her own name, Stephanie Lencioni.
Thank you. Yep. Now we can move on.
Oh, well, we are talking a little bit more about the claims process today, especially for personal lines. And here off camera, we were kind of going over a few things regarding auto claims or toy claims, toys being like RVs and travel trailers and fifth wheels, and toys in our world would also be things like four-wheelers and
Boats.
Sea-Doos,
Yeah.
boats, what do you call them, snowmobiles. Those are all toys.
Those are hot items in Texas.
They are.
They are frequently insured by our Texas residents.
Right.
Yes,
That's right.
the snowmobile.
Maybe in far, far northwest Texas, they might have
one.
Somebody might have
I
one.
don't know. Yeah, and
They're not
second
yet.
Home in Colorado.
Yeah,
then
that's it.
then that's
they own them. There's people that own them here in Texas, but they're not using them.
They
here
are
in
not
Texas.
using. No, not that one.
Yeah, they're Colorado or other places for it. But since you used to be a claims adjuster, what happens when an adjuster looks at physical damage to a vehicle?
We deny it.
Yeah. Well,
Okay.
Yeah.
No, I'm just kidding. I'm just kidding.
So you worked for that company,
Yeah,
did
it was.
you?
Yeah, which is.
Yeah,
like
that
yeah,
company. Yeah, that company. Yeah, I know that we don't use that company.
Yeah, no. I did not, by the way, and that was not
okay.
the
All
not
right.
the process.
But what happens whenever you're looking at I'm just going to say vehicle as generic term, as the adjuster, and you go, okay, I see X amount of dollars worth of damage here, but my computer doesn't tell me what the rest of this damage is going to cost. I don't have a way to factor that. So what do you do in that case?
Okay, so and that was not my part of it.
I know.
I will say, but yes, but as far as being familiar with the process,
you were
so
a desk adjuster as opposed
excuse
to
me, I totally went in the field.
Did you?
I absolutely did.
I did not know that.
Yes, when I
thought you were a
was
desk adjuster.
and I was. However, I would if they were close enough. Like I did,
Mm-hmm.
I did road trips out to Shreveport. Every time I go to Georgia and drive by, I'm like, did investigation at that gas station, and then just with different things. And then I've gone out and I've like measured skid marks and I've taken pictures of the scene. And I was very with it.
Okay.
But yes, I was desk. Yeah,
right.
I was for sure. Yeah, for the most, like 99% of the time, I was definitely behind the desk. So for vehicle damage, so you go out, the adjuster will come from the insurance company and be like, hey, this is what we see. This is what we're going to write up. Two things can happen with that kind of additional damage is number one, there's that, hey, we can't see, I've assessed everything that I can see. And then once you take it to the shop, then your designated person will send us a supplement from hidden damage. But then there's also with some of these specialty vehicles, and like the bigger units, like your RV or, some of these businesses have really specifically made trailers. And they're like, I don't know how to write this up. I don't have the numbers for this. So you need to but it's damage I can see. I just don't know what it's going to cost. And at that point, you can take it to somebody, they can write up that estimate, and then it gets approved by the insurance adjuster. So that would be the process there.
And you use the term supplement. So let's define a supplement.
Well, yes. So supplement. Okay. You define a supplement and then a supplement is truly anything. Technically, it's anything after the initial payment. An initial assessment, it should be after the initial assessment of damage. So supplement really isn't after the first payment. It's after the first assessment of damage.
This sounds a little confusing to me. Let me see if I can break it down a little bit
And I'm
more.
getting attacked by one of my hairs.
So what'll happen, and for those of you watching or listening, you may have had this happen before if you were in a wreck or have physical damage to a vehicle. The adjuster will look at it. you go to the shop. The shop goes, yeah, there's all that damage, but there's additional damage. Let me, the shop, fill out a document or something, a quote, a bit that shows the additional damage that was done
from the initial estimate.
Well, additional damage that was done that the adjuster could not see.
Right, from the initial.
Yeah.
So
for instance, on a vehicle, the adjuster might see, yeah, the whole front end of it smashed up.
they see $10,000 worth of damage.
And they can go, yeah, this can all be fixed. So you take it to the body shop. Body shop goes, yeah, that's all correct, but you've got a bent frame. We can fix the frame if they want to fix the frame, and here's a supplement to show where the frame can be fixed. Or whatever. Or maybe it got into the engine and you've got a small hole in your block of your engine,
right,
and the adjuster didn't see it or couldn't see it at that. So they create a supplement. Same thing happens with homes, right? If you get a roof, the adjuster comes out and says, yeah, we're going to pay for the roof. And the roofer goes up there, starts replacing the shingles, and all of a sudden the roofer goes, there's other stuff here that's damaged that you couldn't see, maybe underneath the shingles or other things.
Right. An extra layer of felt, an extra layer, all of the things.
Maybe the adjuster didn't put down on his original sheet that it had 2 layers of shingles or something. So then the roofer
can get dicey too. So just FYI, folks, they typically would not even insure you in the first place if they knew about the second layer of shingles. So
the supplement is just additional information that is sent back to the insurance company to say, hey, there's more here than what initially saw, what the adjuster initially saw.
Correct. So
that's a general definition.
So, that's what I'm saying with it's anything in addition to the initial assessment, like complete initial assessment. Where in some of those more specialty vehicles, if the adjuster is saying, I know what this is going to cost to fix this portion of it, but because of all of this being custom and fancy and the things, I see it. It's the initial assessment is, I don't know, you have to send it somewhere else. And then that is not a supplement. That is part of the initial assessment, even if you have to take it to a shop and then they write up the estimate because it still gets reviewed, but that is still a part of the initial assessment. Does that make sense?
No.
Okay. Because they see it, but they don't have the pricing. So it's I'm looking at you and I'm like, I know.
We're going back to the original thing. They see it. In this case, they can see it.
They know it's there.
Yes.
They just haven't been able to put a price tag
it's
to
when
it.
They can't see it or missed it that a supplement is done. In this case, they could see it and go, I have no idea what it costs to repair that.
Like, I see what you're wearing. I know how much your jeans cost, how much your boots cost, how much your shirt costs, but I don't know how much the hat costs. We gotta go call someone for that.
No, I get it. Yeah,
and then
that would be
that's
part of
still
the
the
original.
initial assessment.
No, I get it. I get it. Yeah.
That's not a supplement. And then, Dennis, who does the check get paid out to?
Which check?
The first one.
First one usually gets paid to the policyholder, who then turns around and sends
owner of the unit. Yeah. I would say even more so, it's owner of the unit.
And then they turn around and
which is typically policyholder.
Write it to the we hope it's the policyholder if it's written correctly.
True, but sometimes it's like, sometimes you have a kid though who's just still driving. Well, the car was bought, like mom and dad own the car, but this is a 25-year-old out on their own and they're paying for the insurance, but they never swap title. Yeah. But if the 25-year-old is insuring it, they're the ones who gotten whatever happened to the vehicle.
Yeah, why is that important to our conversation?
Because it goes to the owner of the vehicle. So they specifically look up who is the owner of the vehicle, because it's not the body shop's money. It's the owner of the vehicle. It's their money.
Yeah, I get it.
Yeah, that's why that's important. That's all I'm saying.
Okay. All right.
Yeah. I'm just saying the check would go to mom and dad if mom and dad still own the car.
Let's get back on topic a little bit.
All right.
To what
I'm just saying the owner of the vehicle. You jumped my ass about this whole like, well, is it an LLC? Is it an Inc? Is it how are they this? And it's not the policy holder, but it's the owner, and it's the. So don't jump my ass for that, pal. Jesus.
So they can't see. They can see the damage. They don't know what it's going to cost to fix it. So they tell you take it to a shop and have a estimate made.
Right. And repairs don't have to have started, and you don't have to have chosen. You just choose a shop to write up an estimate. That's all that's happening right now.
They may refer you to a shop.
They may.
And that's okay.
And then do you have to use that shop?
No, you don't have to use that shop.
Well, what shop do you have to use, or can you use?
Use any shop you want.
Bingo. Do you have
to
to repair the damage?
You do not have to repair the damage. You can take that original check and stick it in your pocket. Which I was saying, I get asked that question sometimes. So people will say, well, you know, this car really wasn't worth anything, much of anything. And I was not really going to, I was thinking about getting rid of it anyway. Do I have to get this fixed? The answer is, in most cases, no, you don't have to get it fixed. And you can pocket that money. That's completely fine. There is no fraud in that. Where the fraud does come into play is if you try to make the same claim again without getting the vehicle or without getting the damage fixed. Correct.
I will say the other hiccup in that plan is if people have, sorry, I'm still getting assaulted by a hair somewhere on me. If someone has a lien holder on the vehicle, typically the check is going to be written out to the owner of the vehicle and the lien holder, and they usually will require the damage to be fixed.
Get it fixed.
Yeah, because it's their, at that point, they're the ones who own it.
And that's the thing. The people that ask me that question, generally it's owned outright.
No, absolutely. And that's the thing. And if you own the vehicle and then no, you don't have to get it fixed at all. And they're like, yeah, hail damage doesn't bother me. I'll take my 10 grand and I'm still good. Yeah. Okay, great.
Yep.
Awesome. Then I'd not pay for comprehensive coverage anymore, but yeah.
Oh yeah, they're definitely, you need to
no, you can still hit a deer or something like that. I mean, it's still fine.
Have a different claim.
Yeah, it's still fine. But essentially, yes, and to your point, you can't reclaim. Where the fraud comes in is when you claim
twice
again on the same damage without having repaired.
You can't do that. That will get you in trouble.
Yeah. So that's pretty much, and then you kind of brought up the home situation, like, oh, you don't have to replace your roof. But in today's temperature and climate, you do. You have to. With the insurance industry.
Historically, you did not have to. It was like vehicle damage. You did not have to replace your roof. You could take the check and pocket it. And, you just couldn't. But the thing is, if you had hail damage next month or the next year and you didn't replace the roof, you're not getting it. You're not getting
any help. Yeah.
You're getting nothing. So. And there are times when people just are not going to replace the roof, and they're going to make the claim and not replace. I mean, we have realtors that call me and say, hey, can you see if there's ever been a claim on this roof? And I look it up and I'm like, yeah, they made a claim a year and a half ago. And has it not been fixed? No. Okay. Well, that comes into negotiations with
it's a little
with the pricing of the
interesting.
home.
Yeah,
that comes in. So because we can run reports if there's it's to see if there's ever been one.
Yeah, and that's interesting. It is interesting to me when people don't fix their roof because there's usually so much money on the back end because they're not paying you the full amount. It's not like a car where it's like, okay, well, if we can see all of the damage, you're getting all of the money up front. The roof is saying, we're going to give you a chunk of the money first. Then you have to prove that you repaired it, and then we'll give you the rest of the money. So that is an interesting. And how many people own their house outright? Not many.
But how much does a check have to be? I used to know it's changed, but how much does a check have to be before it's written to the homeowner and the mortgage person? The mortgage company, it's over a certain dollar amount, 10,000 or 15,000.
I don't know.
It's not like $3,000 or $4,000, $5,000 check, that usually goes to the homeowner, I believe, used to anyway. But if it's over a certain amount, the check has to be written to two parties, a mortgage company and the homeowner. And that's always, well, I shouldn't say always. Sometimes that's fun because you have to, the homeowner has to endorse the back of it, send it in to the mortgage company, who then has to endorse it, deposit it, and turn around and send the check back to the homeowner, who then can deposit it and
then
turn
write
around and
a
write a check to the roofer.
Yeah. And there's some mortgage companies where they're like, we endorse checks every second Wednesday of the month.
Oh, of course.
And you're like, what? And then there's some where it's like, oh, you can just walk into the bank and you get it endorsed and it's fine. Or you walk in wherever. But yeah, if that doesn't extend the whole roof replacement process.
Yeah, it's a lot of fun. A lot of fun, isn't it?
It is fun.
And we've talked about this before. When you're doing a claim, it is not
it's already a pain in the ass.
Yeah,
Something bad has happened.
It's a pain. And, there are companies that are better at it than others. There are insurance companies that are better at it than others. There's some that'll hold.
There's some homeowners that are better at it than others.
There are homeowners
For
that
being
are better
honest,
at it.
there are just some people who are better at it than others.
Yeah, but when you've never done it before.
True.
Or it's been 20 years since you've done it, or even 10 years or 5 years, or heck, maybe it was last year, but now you have a claim that's completely different. The claims process is pretty much the same. It's just that one was your homeowners, one is now your auto. How does that work, Dennis? Well, it's going to be sort of the same process, but one could be a general liability claim. One could be a roof claim. Well, now those are, auto liability claim versus, now that's those are a little bit different. And so I can understand it gets confusing.
Yeah.
I was listening where was I at? I was at a restaurant the other day, and I heard 2 or 3 people talking about insurance. Because, anytime you hear the word insurance and your insurance agent, your perk goes, what are they talking about? What are they talking about? And one was like, yeah, I've had this problem. The other one was like, I've had this problem. They were talking about their problems. And the third one goes, I just go online and get my insurance. It's just easier. And I thought, yeah, you're the one that's going to have the most problems because you don't know what you're getting. You're just,
right.
And we talked about that too. You got to be very, very careful. Insurance companies, they thrive on ignorance of their customers.
Oh, for sure.
They thrive on ignorance of their customers. And so having a good agent on your side can, if nothing else, just explain to you what terminology means, what processes are usually followed, those sort of items. But
and you said agent too. I will say, keep in mind, most agents also aren't necessarily familiar with the claims process. So they're like, I'm going to call my agent, and sometimes they're running blind too. Mm-hmm. If they haven't had enough experience and haven't dealt with it, they may not really understand the process on the other side as well. So they're just where the insured is, and they're like, I don't know. So, it is, unless you've truly dealt with it and you've had experience and walked people through it or done it's not everybody understands the ins and outs of it.
Especially if you're a newer agent, younger in your career. It can be a little daunting. I remember learning about how the claims process worked with Company X we used to be with, and they were actually fairly good at claims.
They were really good.
And
I give them credit for that.
Yeah, that's about the only thing I give them credit for. Well, their policies were okay at the time, but their claims were always really good. So you learn a little bit you learn what the right way is. Then you get out and you run into companies that they don't do it the right way. They're trying to take advantage of everybody they possibly can. And, we don't like those companies.
No.
We don't deal with those companies. So, but they're out there. There's tons of them. I could name off a couple of big agencies that people know. They drive by every day. and they're after a certain type of client, and that ends up costing that. I know it ends up costing that particular type of client a lot more money in the long run.
Right.
But it's hard to convince some people that that's not the better way to go. So
Yeah, that just goes back to a conversation we had before where cheaper isn't always better.
that's right.
Doesn't mean it's bad. It just, you have to be smart about where you save, and because some companies that are good are hungry in the market, and you fit their perfect appetite, right? And so it doesn't, I mean, I wouldn't be skeptical of every good price that you get. Although if anybody gets a good rate in insurance right now, then I would be skeptical of that. I think in any line of anything, if they're like, wow, that's fantastic,
Yeah.
I'd be like, oh, head scratcher.
I have a client right now that, or not a client. I have somebody that I know right now that reached out to me a few weeks ago. We did a home quote for them, which I don't do many home quotes.
Right, not
anymore.
yourself, yeah.
And they said their renewal, their company they were with, had raised their homeowners up to $9,000 a year. And I'm like, okay, well, tell me who it was. And he said, it is ABC Company. And first of all, I know for a fact that company is really bad about paying for roofs. So, and you know who that is. But I'm like, all right, let me see what I can do.
Initially, I'm like, which one?
Yeah.
But I know the
You know the one that I dislike the most.
the classic one.
Yeah, that most roofers dislike the most. But anyway, so I was able to find him a quote with replacement cost on a 13-year-old roof.
What?
Yes.
That's huge these days.
$6,000.
$6,000. Jeez.
But here's the deal.
$6,000.
He goes,
It is
okay,
better than mine.
I'll let you know. I'm going to make a decision soon. 2% deductible, $6,000 a year,
Standard.
which is standard now.
Standard now.
2% deductible standard.
State Farm is now going to 2%, even on renewals.
They have already been doing that in parts of DFW. Not all of DFW, but parts
Well,
of
no, but now it has been,
Yeah.
the guy in our group was like, State Farm is now officially 2%,
They
even on
also-
renewals.
I'll say this real quick. They also do not take 3-tab shingles. If you have a house with 3-tab shingles, not architectural, but 3-tab, which I know you know the difference,
I do.
they don't take 3-tab shingles for rental or regular homes anymore.
Yeah.
So anyway, going back to this guy, he goes, I'll let you know.
I'll let you know.
Well, it's been 3 or 4 days. I haven't heard from him. So I know what happened is because I know the guy, he went out and got a quote from somebody else, probably for $5,000. That's 2%. Well, they didn't tell him it was scheduled
ACV.
roof or ACV. I know because we have so many companies. I know what the market's doing. And, yeah, so I'm sure that he's going to be in for a big surprise when he finally makes that roof claim.
I'm telling you, that's a gut punch. And I know I've mentioned it before, but again, like we had somebody who got paid, the roof replacement was $45,000, and the insurance company, the total amount after, well, because there was no ACV, there was no depreciation check, it was $7,100
Out of a
$45,000
$45,000 roof.
They paid the insurance company
$7,100. That's all they get
That was it.
forever.
After deductible and then the depreciation that was not recoverable because it was ACV.
Yep.
That
Yep.
at that point, don't make a claim
Yep.
and then just go and get retail.
Oh, it'd be cheaper to do retail because roofers will give you a better deal on retail, but not all roofers want to do retail
Not all of them want to do retail. And then the other,
because they can make so much more money off insurance.
you can. And then like once you know that it's insurance, like then the roofer shouldn't do retail, or it could be seen as, again, fraud because it could look like deductible.
They better not do. They better not. They better not tell the insurance company, or the insurance company better not pay them $20,000 and they only do it for $15,000.
Again, yes,
that
fraud.
would get the roofer in major trouble. That's fraud.
Yep.
That is fraud. It happens. I know what happens, but it's fraud.
Yep.
And
Shouldn't happen, but it happens.
No.
Anyway.
Yeah. It would be, why would they, I don't even understand why they do that, but they do it. Because if you can make $5,000 more, why wouldn't you just make the extra $5,000? It's not coming out of the client's pocket. Oh, they're forgiven deductibles, which is illegal in the state of Texas and 28 other states. So anyway, going back to,
anyway, you make the claim.
It's all about claims.
Per the policy, it is you get paid the damage. And if there's a lien holder, whether it be mortgage or just auto loan, whatever, then it's the owner of the vehicle, owner of the property, as well as the lien holder.
Yeah, I don't think.
But it doesn't have to go to the repair shop. It doesn't, like, the insurance company is not paying the roofer directly. The insurance company should not pay the body shop directly. If they can, if the car is already there and everyone's fine with that, that's fine.
Usually there's a document you have to sign or something that says, I'm releasing the payment to be sent directly to the body shop.
But if you don't want it going to and that's the insurance company can't strong arm you into them.
Correct.
Because that was a situation, kind of what sparked this conversation is we had a client where it felt like the adjuster was pushing them toward this one spot. And they're like, well, I use them for the quote that you wanted me to get, but I don't have to use them for the work. So it just felt like there was a little bit of maybe a kickback happening for the adjuster referring over and then forcing, be like, no, I'm going to send it to the shop. I'm going to send it to the shop.
Yeah.
Which, by the way, is also illegal.
I think that happens a lot more on the commercial side. I mean, I'm sure it could happen on the adjuster. I am not making accusations. I don't know this. You don't know the adjuster's name. I don't know the adjuster's name. So it doesn't matter.
Yeah.
It could be completely.
Could have been innocent.
Yeah.
Could have been innocent. Could have just been handled oddly.
It could have been that shop was in their list of shops that they wanted, the company wants to do business with. It could be in that circle of dependability, I think is what Company X used to call it. Something along those lines.
Interesting.
But,
okay.
It could have just been that. But I think on the commercial side, those kickbacks happen a lot because you're talking big money sometimes. Mm-hmm. If you have a claim for physical damage, and it is certainly possible that the adjuster should say, hey, number one, there may be more behind this I can't see, or number two, I see it, and I don't know how much it costs, so take it to a shop. Let's figure out what it's going to be, and we'll kind of run with it from there.
Yeah.
That's not out of the question. It's not necessarily common, but of that they see it but don't know how much it'll cost to fix it. But it would be common that they couldn't see something and know there may be more behind.
Right.
That would be common. That's where your supplement.
Again, it's usually your custom things and more specialty vehicle units, right? So that's all.
Yeah.
Not your four-door sedan. They're going to know how to write that up.
Yeah, but that's correct.
Yeah, for what they can see, they'll know how to write it up.
What they can see, they know how to write up the vehicle.
But if you've done custom work to it and like lots of aftermarket products and then it's like,
oh man, we're about out of time. But I will tell you this: that if you have a bunch of custom work done to your vehicle,
you need to tell the
better
agent.
add it on to your insurance. Or they may not pay for it. Some will give you $2,000. Some will give you none. Some, so, I know a guy that's got $10,000 worth of custom work done to his vehicle. Well, when he first sent it to me, we added $10,000 of customization to it. And customization can be a lot of different things. It could be a different paint color. It could be a lot of different things. In this case, he had the whole thing sprayed with the whole truck was sprayed with that rhino liner that you normally put
like in the bed and
in the bed, but they had the
back
whole truck like that,
yeah,
and some other stuff. He put big custom wheels and things like that on it. That was an extra $10,000 at the time. Well, now he makes enough money that he's like, I ain't worried about it. So, which is fine. That's his prerogative, right?
Right.
But lots of times that's an investment for at the time it was an investment for him. And most people, that's an investment. And if they have a wreck, they want to make sure it gets put back the way it was.
Right.
But that might be a case where an adjuster goes, I don't know how much, like you're saying, it's custom work. I don't know how much it's going to cost because my computer doesn't spit that out
Right.
for me. So take it and go get back to where you got it done, or take it to another shop. Tell me what it would cost, and we'll go from there. So anyway, thank you all for joining. That's it for this particular episode. This is Insurance Gone Wild. Reach out to us. Send us a note. Contact.
Yes.
I'll get it in a minute. Contact at igwpodcast.com, or you give us a call, 817-753-0093. We'd be glad to cover any topic you may have a question about. And if we don't know the answer, we'll make one up real quick.
Yes.
So, all right. Thank you all.